central bank digital currency, I believe, is a threat to liberty in this country because it creates a mechanism for the government to be able to wipe out your bank account or wipe out your dollars if you say or do something that the government disapproves of, as you see in places like China. As you see even happen to the Canadian truckers, the Freedom Envoy, losing access to their financial bank accounts. I think a central bank digital currency takes us further in that direction. Well, I explained that to Donald Trump, and I give him a lot of credit for being intellectually open, getting to the bottom of it. He took advice from a couple of other people who he trusted around him. A few nights later, I saw him mention that, and again last night when he and I were at that rally together, came out strongly in favor of what I believe is the right answer, which is to oppose the creation of a central bank digital currency.
Welcome to the Cryptoteacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have Vivek talking about Trump. Says that CBDCs are a threat to our liberty. But guys, we see the IMF and BIS moving fast forward. Unfortunately, the sheep are distracted on things that don't matter. And all we have to do is look at history. If you bring the people to their knees, they will accept anything. And we know the Americans will love to get free money, airdrop to them. But little do they know these CBDC stable coins are programmable, telling you what, where, and when and how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And we know that's the reason why we have the drums are beating. The NWO needs that distraction, that one crisis that's going to move this globe over to the 4th Industrial Revolution. This is not about the East. This is not about the West. It is the globe. Yes, the emerging markets are going to move first, but the West is coming right along. But while the emerging markets are rising, the West is going to be falling. And you can already see the setup happening. We have the Fed shutting down one of the facilities. We have the ECB is asking lenders to monitor social media for early signs of bank runs. We have Canada's government is going to be purchasing mortgage bonds. And we had the head of the OCC talk about bank runs, and that's the reason why they want these banks to use the Fed discount window. Anytime you print all this money, raise rates, the fastest in history on this type of debt, we know eventually things get to crumbling. But guys, remember, this is all for the 4th Industrial Revolution. The robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we know the sheep are about to get laid off, fired, whatever you want to call it. So therefore, AI and the machines get to take over. And we have Judy Shelton says that the Fed needs to move out the way. But if we look at every single problem that's going on in the United States right now, you can see the Fed has its hands all over it. And how do they do it? Because they control the supply and demand of your money. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I'd like to begin with news that Bloomberg broke just this afternoon that the OCC, together with the Fed and FDIC, are looking at introducing a plan to require banks to tap the Fed's discount window at least once a year. Why make them tap a liquidity backstop that they may not need?
It's a great question, and I think it helps to back up a little bit and say, why are we doing this? And it's because the speed of bank runs has gotten faster. Last year, in 2008, you had Wachovia and Washington Mutual. They failed. They endured $10 to $20 billion outflows over 2 weeks. Last year, almost exactly a year ago, you had Silicon Valley Bank endured $40 billion in a single day. So we clearly need to build better brakes for a faster financial world, and that's what I talked about.
AI agents are going to start doing a lot of things in our economy, and for AI agents to coordinate with incentive systems, are probably going to use crypto. And so if this AI story works out in certain consumer areas, especially...
And then tokenizes everything.
To AI, about the macro question, are we going to be in a massive deficit in 25 and 26 and spending money willy-nilly, irresponsibly? If so, what asset's safe? I mean, if you have inflation come up again, you have bonds sell off again with crazy government spending, that's a story I'm hearing from a lot of my friends who know macro better than me. You could see crypto do very well.
Yeah, we're not going from 100% debt to GDP back down to 30 just by waving a magic wand, are we? How are we going to do that?
Well, I mean, you got to fire a lot of people. That's a whole other question.
Roger Altman was on, said we figured out it was transitory all along. So maybe the Fed didn't have to go up 500 basis points, but it's good that they did because to normalize rates. But even those increases didn't hurt the economy, which means unemployment didn't have to go up for inflation to come down. And that's been a long-standing thesis of yours, that in fact, unemployment, when it's low, actually helps inflation. How's that?
Well, I appreciate your framing it that way because I have not been one of those economists who kept predicting recession. I have been saying that low unemployment is not inherently inflationary. Economic growth, especially if it's productive, is not inherently inflationary. And so I've always thought that it was really a matter of not cutting off growth and trying to suppress demand, but rather allowing supply to equilibrate with demand, which was strong. And that would be a better model for fighting inflation. I think the problem for the Fed now is in order to maintain credibility, they really have to disavow the former model, which said they had to have restrictive rates. They had to impose high interest rates to cut off growth, to risk higher unemployment, and to suppress demand. And it turned out that was not necessary. And in spite of the high rates, and I'll go to your point about whether those are really high or not, supply came through. So that speaks very well of people working productively. It was a bad thing when we had zero interest rates. And maybe that should tell us the real lesson should be that government monetary stimulus has really been oversold. I don't think that ever did anything good for growth. And this elusive neutral rate that Steve Leisman talked about this morning as being very important to discover. Why not let the market discover that? Why not let the demand and supply for loanable capital determine interest rates? Then we'd have a natural rate of interest. And I think that would be much more efficient than the Fed ratcheting up, ratcheting down, and credit markets living in this month-to-month perils of Pauline, wondering what the Fed's thinking, when instead, really, the Fed should just step back. The Fed should not be such a prominent presence in financial markets. And I hope that's the lesson that's been learned.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. with triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Xrp, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.